Good morning and welcome to the Fight with Fitz. I'm Keith Fitz-Gerald. Thanks as always for joining me. Anyway, here we go. You know, the bubble babblers had one job: to find the crack in the AI story. So they looked and they argued and they waited while selling hype, horse hockey, and hooey to anybody who would listen. Now, I, on the other hand, have repeatedly told you that they're barking up the wrong tree. And it seems, based on last night's earnings, that I might have been onto something. Four of the most powerful companies on earth handed the bubble babblers their answer on a silver platter. Real customers, real revenue, real cycle. All right? And yep, probably real awkward for the bubble babbler crew. I real feel for these guys. I mean, many of these folks are super smart people. I mean, they're not stupid, but it has got to sting to be so convinced and yet so wrong so consistently. But hey, it's a free country. Can't do a whole lot about that. Opinions are like belly buttons. Everybody's got one. If you want to remember one thing as an investor right now, it's this. The world is reorganizing itself around AI the same way it reorganized around the internet. Except this time around, the revenues showed up before the hype peaked, not a decade afterwards. There is an image in the written version of the Five with Fitz today that I want you to look at. The sixth wave. Look at this little thumbtack. We are here now in still early days. The numbers, of course, that happened last night, that we learned last night, tell the story better than I ever could. Microsoft, Azure was up 40%, beating the high end of guidance. The AI business is now running at $37 billion a year annually. That's repetitiously redundant. Up 123% year over year. Copilot, passed 20 million paid seats. 20 million, folks. This is not amateur hour. Google Cloud up 63% to a $20 billion with a backlog of $460 billion. Sundar Pichai, CEO, said enterprise AI has become the primary cloud growth driver for the first time. Let me think about that one again. The primary cloud growth driver for the first time. Think how big Google is and what a statement that is. Number three, Amazon. AWS was up 28% to $37.6 billion, the fastest growth in 15 quarters. Several years, folks, several years. And Amazon reaffirmed $200 billion in CapEx for the next year. Not a typo. Then there was Meta. Revenue was up 33%, the fastest since 2021. Full year CapEx guidance raised to $125 to $145 billion. I mean, never mind what I think of him personally as CEO, but El Zucco deserves props on this one, folks. Now, let me tell you what really is dead after yesterday's blowout. The whole AI deceleration and speculative spending narrative. Yeah, the show me the revenue crowd wanted an answer, and they got one. They may not like it, but they got one. This was the prove it quarter, and they, as in big tech, proved it. Now, my guess is the naysayers are going to keep at it anyway. Let them. The negative Nellies have talked more investors out of more wealth than any earnings report or bear market ever has. Hopefully, you didn't fall for it, especially considering how many times we've talked about what's happening. What we saw on every call yesterday isn't a sugar high, but in my humble opinion, durable and very real cloud demand with accelerating AI monetization being underwritten by signed customer commitments. Not hope, not hype, and sure as heck not PowerPoint deck. Again, real customers, real revenue. The bubble babbler crowd had its moment to be right, and they biffed it. The companies pouring capital into AI infrastructure aren't gambling, but in my humble opinion, they're buying and building the most valuable foundational elements of the next decade. To paraphrase both Uncle Jensen and Auntie Lisa, we're still early days. Now, my POV is straightforward. When four of the largest companies on earth all beat in the same quarter and all of them raised their forward spending, I can't imagine better confirmation that the AI build-out is accelerating. Now, the returns are showing up in the numbers right now, not someday. So if you've been waiting for permission to believe this is real, or you've fallen for the hype and the hooey, this may be the ultimate are you paying attention moment for investors. Buy the best, ignore the rest. Repeat after me. Buy the best, ignore the rest. It's very hard to go wrong when you do that. And finally, number 5 today. Then there's the Fed. I mean, Anyway, the super savvy Brandy Scott asked me for my take in the UAE early this morning. And we had a wide ranging interview that I think you may enjoy. You can watch that elsewhere on the channel, talking about the Fed, Jay Powell's latest, and of course, big tech too. One of the things that's interesting takeaway there is that you are the product when it comes to big tech. So think about that one carefully. Keith's investing tip in this department: naysayers are more dangerous, not because they're smart, but because they sound smart right up until the moment you realize listening to them has caused you to miss everything. I hear from investors regularly that this has happened over the last several decades. Remember, investing in optimism beats cowering in fear and pessimism. Speaking of which, the May issue of One Bar Ahead and some new research drops tomorrow, so keep an eye on your email if you're an OBAer. And if you're not, well, can't help that, but I'll be here if you need me. Bottom line today: invest in where the world is going, or you and your money will get trapped in where it's been. Innovation pays, and it has throughout recorded history, which is why the world's smartest investors constantly focus on it. Please do take a look at the image in today's written 5 with Fitz. It shows per capita since 1 BC what innovation has done. Anyway, you got this, I promise. I'll get off my soapbox now and I'll let myself out. Remember to tip the waiter. As always, let's make it a great day. Thanks for watching. See you tomorrow.